Hi everyone. Today is Thursday, April the 4th. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. I am looking at the IWM. We are going to take just a quick peek at the IWM and the TLT because these are going to be key things. One, the TLT has dropped out of very long and very wide channel it's had for many months. That's got to do with interest rates and such. But if it recaptures this edge, we're probably in another buy the dip formation. And so if we take a look at the IWM, to me, we were in the Zoom call during the midday yesterday, and someone said, hey, can you pick me up something positive, bullish for the IWM? And my suspicion is, listen, pullbacks are going to be buy zones here. And bounces are likely to fade until we actually get that first interest rate pullback, right? Till they cut the rates. And so it's a bounces that fail type of formation. So right here, this is what we want to watch for. We had it test this area. I want to test it again to see if that'll happen. But that is what we are looking at here. My thought is if it pulls back to 200, it might give us a better formation to take a look at. Let's hop at the SPY. Taking a look at the SPY, it is clearly sitting in a formation where we came in, reverted to some kind of mean. Now this is an 8 here, so this might have been a 12 or a 14 or something like that, but it was old resistance that became new support somewhere around this 516.50, and now the price action is still neutral bullish. We are above the close of the prior day and trying to walk through the wall of worry that came off of these two long red candlesticks. And so my thought is we're in a buy the dip formation unless we lose 520. And if we lose 520, that's going to be the zone that says, hey, listen, we need to pump the brakes on buying the dip. So that's really what we're looking for. Again, you know how the volatility bands work. If you're new, just look at yesterday's video and it'll show you. All right, let's take a look at the cues. A lot of times I just spend way too much time digging in the weeds every single day. And many of us know exactly what we're supposed to look for. We just have to put ourselves in a space where we are very routinized about, okay, what's happening? All right, so where are we? Above the close of the prior day. That's a bullish event. Where is the price action going? It's trying to head up here. What if it can't head up there? Well, there's the problem, right? If we lose 443, we're going to have more downside action, right? As long as we hold the 443 zone, we're going to be in fine shape. Now, here's the thing. This is neutral to bullish formation. So the bounces are still going to be sell zones. So what do we want to make sure that we are sitting still in sell territory is as long as we don't get up over this 445, 60-ish area, we're in good shape. See all of these triggers? I mean, we're in a messy patch, folks. This is messy. And when it's messy, you want to buy the deep dips and sell the rallies. And that is all we are looking at. We need a ton of patience so that we can have the least amount of risk when we engage. All right? Traders trying to hold this. Look at that. They just stopped here. What is my thought? My thought is, indeed, it is a sell the bounce event. However, because we are above the close of the prior day, it makes people more bullish, and the people who have been short are going to be caught on their back foot having to buy to get out of the market. And so what we have to do then is just be very careful and wait for the heavy congestion where we can position and make the most money. Listen, I'll be on Top Step TV. We'll be on Fast Markets. We'll be trading live. And I'll be trading some of my Top Step accounts. Join us there if you've got a minute, and we'll have some fun. Let's take a look at the ES. Forgive me for not covering the YM yesterday. Just a super busy day, just like today is, but I'm definitely covering the YM for us today. So as we take a look at the ES, the same lines that we've had for days and days and days and days and days are holding. What did we do? Revert to the mean. This number, 52.36, 2 days ago. Yesterday we came in, held above it. That's good news for the bulls, right? So that line that we have right there, we can shift it up because we know that the buyers did not let anybody get lower than that. If it comes back here and the buyers don't defend, we've got to collapse into the 52.15. I don't see any massive breakdown event going on here. What I do see is dissonance, momentum down, trend up. And when that's the case, you let the bounces go as high as they need to before you think about shorting, and you let the fades go as low as they need to until you think about going long. What are we looking at? A megaphone. See this? Higher highs, oops, higher highs, lower lows. And I gotta tell you folks, megaphones, they're crap to trade because you don't know what the lowest low is, you don't know what the highest high is, you just know it's gonna collapse. So you have to watch your volatility bands. And remember, I told you, especially in the Zoom yesterday, we talked about what happens to these bands and price action as we work through the price intraday. Remember, if you're interested in those Zooms, you can always join the Benzinga Pro platform. We do that 3 times a week. We study and put trades together. So there's that. Here we have same sort of thing, series of lower highs, series of lower lows. Not so much a megaphone here, just downward trending. What's happening? Are we above the close of the prior day? Yes. So what are we doing? We're trying to walk through this wall of worry. When are the sellers going to get put on their back foot? If we break through this line above at 515. 18,515, the sellers are going to get really nervous. They're going to start buying to cover, and we could run another 100 points. You know how this chart goes. That being said, it is still a buy the dip, sell the rally formation because we are caught sideways retracing this gigantic candlestick. I think that's from the last Fed meeting, right? So it is what it is. Now, finally, let's take a look at the YM. Sorry about the sniffles, just getting to be that, you know what, I'm always sniffling, always. My lungs are a mess. Okay, so here we are, taking a look at the YM, right? We had a trend break. That is no longer valid. We're going to remove that. Look at all these breaks, right? Big highs, higher highs, lower lows, ugly megaphone, but a megaphone nevertheless. Came in, this is a 27, right? Could be a 30, whatever. But it came into that level at 39,343 that we've had since it broke out over here. And so that's going to be the next line in the sand that we want to watch. Listen, you have a line on your chart. You want to trade that line. If you're not going to trade the line, don't put it up on your chart, okay? So we're going to trade these spaces. If it comes and breaks through this area, but doesn't touch this area, I'm going to look to go long on this edge, right back up into the 39,640. What are they trying to do? This was a doji. We've got formations that say, listen, this is a buy the dip formation. We are going to try and put the sellers on their back heels today. It's going to be sticky. All right, what do we have at Econo Day? Today is April the 4th. Whoa, we've got lots of Fed speakers auditioning for their next gig. We've got jobless claims coming up in a few minutes. We had Challenger job cuts, came in and nothing really. Tomorrow is the big day. Today's going to be sloppy, folks. Be careful, and I'll see you on the platforms.